Well, hello, folks. My name is Benjamin Z. Miller, and I welcome you to the Benjamin Z. Miller Investor Networking Group. In this presentation, we are going to talk about short sales. Short sales are a way where you can purchase maybe a property, maybe you can purchase a boat, maybe you can purchase a business, but you buy this asset from a seller that has a financial situation where they are not able to keep current on their mortgage debt to their lender. And we'll go through how that works. Let's take a simple example just to explain the concept. Imagine that there is a property that has a debt of, say, $250,000. Let's imagine that the true value is $200,000. Now, the reason the debt is so high is maybe the person for a year or two has been living in the property, not making payments to the bank, and telling the bank, I want to do a modification, I want to do this, and the bank has been slow on going through foreclosure. And banks sometimes can take years to do a foreclosure. Of course, it normally is a few months, but I have found many examples over the years of banks that have had people in the property for 1 year, 2 years, sometimes even 3, 4, 5 years where they have not made payments and they have not done a foreclosure. So that would be how the mortgage debt is higher than the value of the property. But they desperately want to get that non-performing loan off of their books. So an investor comes in, the value is $200,000. The investor signs a contract with the seller and says, I'll pay $80,000 cash. You're not going to get any cash out of it, but I'll pay you, for example, a couple $1,000s so that you've got money to move to another place. And I'll see if I can negotiate with this with your bank, and then you won't have to make the payments anymore. And for the right seller, under the right conditions, they might agree. If that happens, this could be done where you capture $120,000 in equity, just as an example. So why would a bank accept a short sale? Well, that is a great question. This relates to the fact that banks are regulated and they have a certain ratio that they need to maintain for non-performing loans. If the percentage of the bank's loans that are not performing grows too high over a year or 2 or 3, this can cause very serious problems for the bank. And that's part of the reason that banks are very careful on giving loans normally. But if they get too many non-performing loans, it causes all sorts of problems for the bank. But what happens is the bank with fractional reserve banking, each country is a little bit different on how the ratios work. But as an example, if the bank has a certain number of assets on the books, then it can loan out a multiple of that. Maybe to make the example simple, we imagine that the multiple is 10. It varies, but it could be higher or lower than that. But, just say it's 10, for example. So if the bank has $1 million in assets, they can loan out 10 million. Well, banks consider performing loans are considered assets. But if a borrower stops paying on the loan, it's no longer a performing loan and it's no longer treated as an asset. So as example, if there's one loan for 100,000 and it becomes a non-performing loan, in that case, the bank loses the ability potentially to loan out another $1 million, where they could have made a lot more loans to other people, but because they have this one bad loan, it's costing them a lot in terms of opportunity costs. So one bad loan can mess up a portfolio where if it hits the right ratio. So it's something that's definitely why a bank does not like non-performing loans, and they will want to do something. So the typical things that they will do is they'll send some letters to the person and they'll say, you need to get out of the property, give us the ownership back, leave, sell the property, and we can work out a plan where you can pay back your debt over time. And if the owner of the property doesn't cooperate and just keeps living in the property, then the bank, if they're not doing a foreclosure, it starts building up more and more months with no payments being made. And this creates a situation where the bank over time needs to do something. And that is what is going on there. Also, the good relationship that years ago existed between the bank and the customer of the bank, that is now a bad relationship. So Now the owner of the property is angry at the bank because they needed a modification, they needed another modification, they had a problem, and the bank said no. So now they're no longer friends with their bank. And the seller, he understands that he's not going to get anything out of it. His goal becomes, how long can I live in the property without paying the mortgage? Not every seller, but very often that's the way that they are thinking. They also are in a situation. So as an investor that can locate one of these situations, they can say to the seller, hey, how about if I try to do a short sale on your property? And then the person will say, well, what is a short sale? And then the investor will explain, well, it's where I buy your property for less than the amount you owe on it. So you've got a mortgage of 100,000. I'm going to try to buy it for like 20,000. And then, I'll see if I can work something out with the bank. If they agree to that, you won't have to make any more payments. And then the person will say, well, they're not going to agree to that. There's no way they'd agree to that. That's less than I owe. It's got to be higher than that. And then say, well, listen, let me try. You got nothing to lose. Just sign the contract and I'll give it a shot. And if you end up finding another solution, we can just cancel the deal. So that's how you might approach that sort of a seller. So you get a signed contract to purchase, and then you're going to go through some steps to make that work. You're going to have them fill out what's called.
This is an actual document that's from Bank of America, and it's the document that you fill out when you start a short sale. So you would get this document from Bank of America. You could find it on the internet. And when you've got somebody that has a loan with Bank of America, you would go and fill out a document like this. So
this document is called an authorization to release. So with the seller, you would sit down and you would say, I need permission to speak to your bank. And they'd say, okay, you can speak to my bank. I say, I need you to sign a form so I can speak to your bank. Okay, I'll sign the form. So you fill this out and then you send that off to the bank, where the bank now can talk to you and answer questions about the mortgage. So it's important to get that authorization to release. That's one of the forms that you need. Then you're going to help the seller to prepare a hardship letter. This is where the seller has had some difficulty in their life. Maybe they lost their job. Maybe they're going through a divorce. All sorts of things can cause a hardship, but you'll document this in a nice, well-written letter. You have the seller sign the letter so that when you submit the offer, you also have this as part of the short sale, so that the bank gets it and they can see, okay, it's not that they didn't want to pay. It's just that they had a medical problem. It's just that they lost their job and they just want to sell the property. Okay. So this is another important piece on a short sale. So once you've got these documents in place, before you can actually get the bank to do business with you, you have to show cash. You cannot do this sort of a deal very easily, like a wholesale deal where you can just tie it up on paper but not have any cash. You've got to show that whatever entity it is that is making the offer, if it's you need to show your bank account with that amount of cash. So if you make an offer for 20,000, you should have a 20,000 in a bank account. If you make an offer for 100,000, you should have 100,000 in a bank account, or else the bank won't deal with you. I'm not saying never, but most banks, if they don't see an account matching the offer, especially if they're a larger bank, they're not likely to take the offer seriously because they don't want to go through everything. And then essentially with that, the bank will send out an appraiser to write down the value of the property. And then they'll take a discount on that. It varies how much they will take, but the bank will find their own appraiser to go and look at the property and tell them how much it's really worth. And then they're going to take usually a discount on that. I mean, it varies from bank to bank, but as an example, maybe they take 80% of the appraised value, and they take that amount as an example because they figure, well, to fix the house up and to go through a foreclosure, it's going to cost us money, and to pay a real estate agent is going to cost us money. And if you're somewhere around 80% of the appraised value, you've got a high probability of getting a yes. And if you're at 10% or 20% or 30% of the appraised value, you have a lower probability. But these factors are negotiable, and it's something where there's a lot that can go into it. But in general, the important points when you execute a short sale with a seller is you have to take control of everything. You cannot expect that the seller will do your work. It's your job to put together the hardship letter to help them with that. It's your job to document all the damage to the property, to get maybe contractor bids showing how much damage there is, to get pictures showing how much damage there is. If you're able to, you should try to meet the appraiser when they do the appraisal so that you can also point out some of the damages for the appraiser. You want to remind your agent to basically mark it, because it needs to be marked as that it was on the MLS. You want to manage expectations. You want to make sure that you document everything. But once you build this stack of documents, then you are set up to do a short sale. To do a short sale, you have to be very strong at paperwork, and you have to be very good at filling out paperwork, because it is not something that you should do if you're not an organized person, because the bank paperwork is extensive. It can take months sometimes to complete a short sale, and the bank will make a checklist of everything they want. And if there's one document that's missing on that checklist, they won't do it. And they'll put a timer on it also, where there'll be, for example, 90 days to complete the short sale. If the short sale runs over 90 days, say it's 92, 93 days, then they will demand a new appraisal often. So that starts that whole headache and that whole process over. But a lot of pieces have to come together to do a short sale, but it's definitely something that once you get one approved, it is a great situation, because once you actually finally get a short sale approved, you are absolutely set. And another thing is you can outsource
And
the
say
work.
that you are in a situation where you have managed to locate some motivated sellers, maybe they are behind on payments, and you recognize that this could be an opportunity for a short sale. But you're looking at this situation and you don't actually want to yourself deal with all of the paperwork. You can hire a company where basically what you can do is you can take your seller that is the motivated seller, and then you can say something like, we should try a short sale. If the seller agrees with that, then you could contact a company like, for example, Oyez Real Estate, although it could be any company. I simply use them as an example, but they are in Texas, and they're a company that they specialize in short sales. So if you were doing a deal in Texas, and let's say you had a seller that maybe had a bank loan with Wells Fargo or Ocwen, and you wanted to do a short sale on it, but you did not want to do all of the work yourself of filling out all those forms to get through all of that, you could talk to a company like Oyez Real Estate, explain that you're an investor, that you have leads for short, and say that you are in a situation where you have managed to locate some motivated sellers, maybe they are behind on payments, and you recognize that this could be an opportunity for a short sale. But you're looking at this situation and you don't actually want to yourself deal with all of the paperwork. You can hire a company where basically what you can do is you can take your seller that is the motivated seller, and then you can say something like, we should try a short sale. If the seller agrees with that, then you could contact a company like, for example, Oyez Real Estate, although it could be any company. I simply use them as an example, but they are in Texas, and they're a company that they specialize in short sales. So if you were doing a deal in Texas, and let's say you had a seller that maybe had a bank loan with Wells Fargo or Ocwen, and you wanted to do a short sale on it, but you did not want to do all of the work yourself of filling out all those forms to get through all of that, you could talk to a company like Oyez Real Estate, explain that you're an investor, that you have leads for short sales, and that when you find a motivated seller, you'll direct the motivated seller to them. They can do the paperwork with the seller to properly list the property, and then you just let them know that you want to put an offer in on the property once it becomes available. You actually would have an offer already with the seller pretty much worked out. But that's an opportunity there if you're the type of person that's good at generating leads, but you're not good at paperwork and keeping track of all of this. You can work with another company that will actually take care of all of that.
So that's definitely important, where if you're not strong on the paperwork side, if you don't like to fill out forms, you can find a company that you can outsource that to. I mean, they're going to make money on the deal also, so it will reduce some of your sales proceeds, but it'll free up your time. So it's definitely something to consider, to outsource the paperwork. Can you do short sales on boats? Can you do them on yachts? Can you do them on, you can do them on all of those things. It's simply a matter of finding a seller that has stopped making their payments, getting the seller to sign a contract that they will sell the asset to you for less than the debt. And then it's a roll of the dice. And what I mean by that is you can do all of the paperwork, you can do everything perfectly, and the bank can still say no. But if you do enough of these, if you do 5 or 10 of them, over time, you're going to get some wins. You may try 1 or 2 or 3 and the bank says no, and then on the 4th one, they say yes. And as you get better and better at this, you can get a higher and higher result on this. So that's definitely something that I'll show one thing here just as an example.
National liquidators, they specialize in boat and yacht short sales, where basically what they do, it's kind of an interesting company, is if somebody is in a situation where a bank where they're not paying on their loan, this company will actually try to collect, and they are set up to market boats, yachts, commercial vessels. And what they do here is it says that they do an auction every Monday at 4, and they get the result of the auction, and then they send it to the lien holder, the bank, or the owner if the asset's still.
The point of this is basically the debt on that asset is being released for less than the amount of money that's owed. This is a third party, national liquidators, that's involved, but you could do the same thing without national liquidators. If you found somebody that had a boat or a yacht and needed to sell it, you could work out a deal with them where you're going to buy it for cash for less than the value of the debt. And then you could approach the bank and try to see if you could get them to take a discount on it. And you would be surprised, because many times a bank will say yes when you're thinking that they won't. So these things are important. Just an announcement before we end. The sign-in sheet, I think everybody that is here, we know from before. But if there's anything you want to put in that sign-in sheet that has changed, please feel free to update that. We'll get a copy of everything to you. And every week we have these meetings. If you're on the internet and you want to come, just send me an email, ben@benjaminzmeller.com. I hope that helps, and I wish you good luck with your investing. I'm going to go ahead and stop this, and then I'll take any questions that anyone may have.